Parag Thakkar joining in to tell you about what he thinks about that. Parag, a very good morning to you. And what do you make of that? 4,000 crore rupees of slippages, gross level, and technical write-off is what they're calling it. And they're not anticipating that the asset quality issue is going to go away anytime soon.
Yes. So this technical write-off is a new word coined by Axis Bank. So I would like to say that even if you suppose believe them and say that, okay, this is a technical write-off, 80% of that is secured, so it will come back at some point of time. First of all, retail slippages cannot come back so fast. That is my view. And the second is in retail to have such a high magnitude of technical write-off is also difficult to digest. Even if you knock off that, the credit cost is 1%, above 1%. Now, see, banking is a leverage business where you make 1.52% ROA. And if you have a bank like Axis, which is saying your credit cost adjusted for technical write-off is above 1%, I think here the only saving grace is valuations and so much of liquidity in the market. Fortunately, I don't hold the stock, but I will buy, as you very rightly pointed out, I will buy only and only once management clearly says that this is the quarter from which our asset quality will improve.
Okay. By the way, you were talking about Wipro just yesterday, and the question that we asked you was, would you be willing to stick your neck out? And you did.
Yes.
Are you happy that you did?
Yes, extremely happy. Large deal wins were $2.7 billion. Margins, they were able to protect at 17.3% in such an environment. Of course, LTI Mindtree also did that. Deal wins were absolutely great. I think the guidance, Wipro is a very conservative and clean company. So I would say that -1 to 1% guidance for Q2, which is okay. But I think they sounded very confident for H2. I would say that full marks to the team. I think that you see Mr. Srini is doing a wonderful job. He's a people's man. I'm very happy with the result. I will even thumb the table today and buy the stock. And see, trailing P is 20. 70% payout implies around 3.8 to 4% dividend yield, as I mentioned yesterday. Yesterday on the call, they were very clear that even buyback is not completely off the table. So I would say that where you are getting such margin of safety of trailing P of 20, cash flow generation, they have a net cash of about 30,000 crores. You have a dividend payout of above 70%, which implies around closer to 4% dividend yield. Where there is so much of safety and little bit of growth traction coming back now with such large deal wins.
Okay. So, Parag bhai, sorry, just reconfirming, 20 seconds. You would buy Wipro even if it opens 3-4% higher?
Yeah.
Wow. Okay. Okay.
And if it falls due to the concern, one concern which people might have is that EBITDA margin. They have said on the call that in order to win such large deals, of course, there was intense competition to win those deals. And so when they will ramp up these things, there will be some front-end expenditures, and which will I would say, brings margin to some degree to downward levels. But I would say that if that is the reason, and if the stock gets sold, I'll be a buyer for sure. Because in Wipro, everybody was looking for leg. See, why the stock has been a laggard? There was no growth. Now the new CEO is talking about growth. Okay, they have demonstrated by winning such large deals in a competitive and extremely volatile environment in the middle of this Trump tariff thing. So I would say that a great margin of safety. I think there are very few stocks like this in the market today.
Okay, buyer at open as well, but happy to buy even otherwise if it opens lower.
Already I have 4% weight in the portfolio.
Wow. Okay, that's confidence personified. Parag bhai. Yeah, okay. Well, point well noted. The optimism shows.
My view is very long term.
Yeah. But people should use their own due diligence. Agree.
Some guys to buy.
Agree. Parag bhai, thank you so much for joining in today and giving us this quick view.